You're listening to AI PRISM from Seoul Economic Daily.
It's Wednesday, May 20th. I'd like to share some thoughts about stock investors. The KOSPI closed at 7,271.66 today, down 3.25%, a nearly 10% drop in just 2 sessions from the intraday 8,000 peak on May 15th. Three forces are amplifying the sell-off. First, margin loans. Korea's total credit trading balance hit 36.5 trillion won, roughly $26 billion, an all-time record, up 33% from January. As prices fell, forced liquidations surged. On May 18th alone, margin call volume reached 91.7 billion won, about $65 million, the highest since March. The daily average this month is 343 billion won, above even the US-Iran war shock levels in March. Second, short sellers. KOSPI daily short selling in May averaged 2.05 trillion won, up 77% versus January. Securities lending balances, the leading short indicator, surged 53% year-to-date to 169.7 trillion won, about $121 billion. Third, ETF mechanics. Passive ETFs liquidate all index components simultaneously as a basket when forced to sell, mechanically amplifying swings beyond what individual stock selling would produce. Citigroup downgraded KOSPI from overweight to neutral the day before the drop, recommending 50% profit-taking. Foreigners net sold 6.2 trillion won, about $4.4 billion, on May 19th alone, over 9 consecutive sessions. Individuals bought 38.3 trillion won, foreigners sold 41.8 trillion won. Watch May 27th. Single stock leveraged and inverse ETFs on Samsung Electronics, ticker 005930, and SK Hynix, ticker 000660, debut on the KOSPI. 74,315 investors have already completed mandatory pre-trading education. Daily rebalancing will mechanically amplify end-of-day volatility in both names from next week. On the structural side, positive for long-term re-rating. Since the third Commercial Act amendment passed February 25th, treasury share cancellations now outnumber disposals. 154 cancellation filings versus 111 disposals from March through today. In December 2025, before enforcement, the ratio was reversed. 137 disposals, only 33 cancellations. Major year-to-date cancellation commitments. Samsung Electronics, 14.9 trillion won, about $10.6 billion. SK Hynix, 12.2 trillion won, about $8.7 billion. SK Corp, 4.8 trillion won. Samsung C&T, 2.3 trillion won. Cancellations reduce share count, raise earnings per share, and eliminate the governance practice where Korea's chaebol, family-controlled conglomerates, use treasury shares as a control mechanism rather than returning capital. The 18-month disposal deadline will push more announcements in H2 2026. Finally, China's CXMT, Q1 2026 revenue, 50.8 billion yuan, about $7.9 billion, up 719% year-on-year. Net profit up 1,688%. CXMT's commodity DRAM market share reached 7.67% globally in Q4 2025. Their products price 15 to 20% below Samsung and SK Hynix. The threat is in commodity DRAM, not HBM, where Samsung and SK Hynix ship 6th-generation HBM4 while CXMT targets HBM3. But HP and Dell are running qualification tests on CXMT chips. Certification by major OEMs would accelerate adoption. Commodity DRAM prices doubled in Q1 2026. TrendForce projects up to 60% further increase in Q2. That tailwind is currently absorbing the competitive pressure. 3 things to watch. May 27th single stock leveraged ETF debut, Q2 TrendForce DRAM price data, and H2 chaebol treasury share cancellation announcements approaching the Commercial Act deadline. That's today's AI PRISM, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Won IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.